Hello, everybody, and it is awesome to see you here, especially since we are the last panel, and this is quite a great audience, so this is good news. And the best part about it is they accommodated me with seats that I can actually reach the ground, so that's awesome, because usually I don't. All right, well, look, my name's Tony Rossabi. I work for a company by the name of TierPoint. We are a national data center provider. I'm gonna give an intro here to Dana sitting to my left, and then everybody's gonna run through and introduce themselves. And I have a few questions. We wanna make this interactive. So if you have questions as well, we're gonna talk for about 20 to 25 minutes, and then please feel free to jump in and ask questions. So I'll turn over to Dana.
All right, great. Hi, everyone. Dana Adams. I'm the Chief Operating Officer at Airtrunk. We are a hyperscale data center provider based in Australia, growing rapidly outside of Australia and becoming the largest hyperscale provider across APAC. Before Airtrunk, I was in portfolio management and operations with other data center companies, Iron Mountain and Digital Realty. Joined Airtrunk a year and a half ago to head up our data center and business operations. And it's been a very exciting ride. We have 2 facilities we're operating that have been live, 130 megawatts each. Sydney, Melbourne, we're opening up new sites in Hong Kong and Singapore this year, and working towards several other markets that will be opening in the year to come. So happy to be here and look forward to speaking with you all.
Great. Hi, everybody. Thanks for the invite to the PTC group. I really appreciate the chance to talk. My name's Simon Cooper, Chief Operating Officer at NEXTDC. I've been with NEXTDC since 2011, and in that time we've grown to 10 data centers across Australia, about 300 megawatts of capacity on plan, and we are also considering the Asian market, so there's other perspectives which we'll be looking forward to talking about here. My background before data centers was the submarine cable industry at Tata, at Cable and Wireless, at Level 3 Communications, and I just kind of shocked myself the other morning when I did the maths. I've been coming to PTC for 15 years now, and I'm now one of the guys that I looked at when I first came and said, oh, I wonder how people can just come here year and year and year and year and year, and here I am, because it's an incredible environment to find out what's going on, hear about new ideas, and watch the world change. So again, thanks for the invite. Look forward to speaking. Over to yourself.
Thanks, Sam. Peter Hopper. I'm the CEO of DH Capital. We're a boutique investment bank based in New York City that specializes in data center transactions. We've been very fortunate over the last 10 years, but certainly the last 5 years in particular, to be very involved in some of the larger deals that have happened, going back to Tony, your predecessor company, Telex, on the sale to Digital Realty. Deals like Ascenti being bought by Digital last year. We advised Ascenti and Infomart as well last year on their sale to both IPI and to Equinix. Remains a great sector. Tony, thanks for the invite. It's great being here. It's a fabulous show, super productive. How about a round of congratulations, applause for Dana and Airtrunk? What a fabulous story, fabulous story. Really exciting. So, looking forward to the discussion.
Thank
you. Lee Kestler, Chief Commercial Officer of Vantage Data Centers. I've been with Vantage for about 2 years. When I first joined the company, it was acquired by Digital Bridge about 12 months earlier. And when I first joined, we were about 40 megawatts. And the plan between then and today was to try to expand to 6 North American markets and have 500 megawatts of developable capacity. And we're very close to that. So, and with that, I've started to shave my head a lot like Peter, so I could handle.
Sorry about the glare.
But, yeah. So we are very proud for that growth, but we are a hyperscale provider, so if you can manage your own network and compute, then we're an option for you versus building your own. And so I'm very proud to be here. First time to PTC, so I've enjoyed it a lot and hope to come back again.
My name's Jaime Leverton. I'm the Chief Commercial Officer for eStruxture Data Centers. We are a Canadian-based data center provider. We started about 2.5 years ago, and through a series of 4 acquisitions, 2 builds, we are now Canada's largest Canadian-owned carrier-neutral data center provider with data centers across the country, Montreal, Calgary, and Vancouver. I have spent the last 20 years in tech and telco in Canada and absolutely love this space. This is my favorite show every year, of course, as I'm sure it is for many of you. So happy to be here and happy to be on the panel.
Well, great. Thank you, everybody. This is an awesome panel. Fortunate to have experts in the space with a robust amount of experience. I think that there's a lot going on in this space. You hear about consolidation. You're hearing about kind of what's driving the takedown of space. And you know, obviously they're going to share experiences. We're going to talk a little bit about that. I'm going to start with Peter to give a little bit of kind of what's going on in the landscape of M&A, first of all, and then a little bit of background on kind of what your view is on the landscape of sort of data center growth.
Okay. And I certainly invite my co-panelists to jump in. Certainly the operators have a great perspective on the landscape question as well. But
Absolutely.
To kick us off, as I think all of us in this room know and recognize, it remains an incredibly dynamic sector to be working in. Lots of demand, underlying demand from customers. Probably that demand is highly concentrated from a small number of customers, which drive a lot of the activity globally. But the background trends, the growth of cloud, the growth of Internet of Things, all of that is creating huge demand for more data center infrastructure, more fiber, more connectivity. We're definitely, the edge has been talked about for years. I think we're finally beginning to see the edge take shape and workloads really move toward the edge, and seeing lots of demand for capacity in tertiary markets that for a number of years have been very quiet. But I think we're finally seeing the impact of the edge now in tier 2, tier 3 markets. And then obviously in a number of major markets around the globe, very, very intense hyperscale demand. And that's really what's driving a lot of the activity, both from an investment standpoint, M&A standpoint, is investors, both financial and strategic, are in search of growth. So I think people are looking around the world and saying, all right, North America, we're going to continue to see hyperscale demand and hyperscale growth, but so much capacity has been taken down by these key customers over the last 3-4 years that there is sort of a ebb and flow to demand where they need to absorb and utilize what they've already committed to before they're willing or able to make huge additional commitments. So, you know, Lee, you can probably speak to that a little bit at some point. It ebbs and flows. It's sort of a market by market thing. But as you look around the world and sort of look at like a heat map of population, you know, population, eyeballs equal content consumption. You know, where have the hyperscalers not deployed in a big way, where they're big population centers? And that gives you a good clue as to where they probably in the future have to do that. So, you know, Dana, looking back, you guys, I'm looking back on Australia, you know, you could sort of say a few years ago, this is a major market without a lot of hyperscale, you know, capacity yet. You knew it was going to happen. Chris Torto in Brazil, you know, that was his thesis for South America and Brazil, that look, we know they've got to come down here at some point, and we're going to be here to serve them when they do. I think as you think about places like India and all other regions of APAC, you know, you can just draw the conclusion that capacity has to get built in these markets. It's going to happen. And smart companies, smart operators are deploying capital and going to capture that demand and earn the returns from it. So very dynamic market, lots of M&A activity, both from financial buyers, strategic buyers, and as we think about just Australia with, you know, the deals that have gone on with Airtrunk and Metronode, you know, you've got a strategic stepping in and buying, you know, buying Metronode. You've got financial advisors or financial investors stepping in on Airtrunk. You know, I think Terraco went to, in South Africa, went to financial buyers. But the strategics remain very active acquirers, very interested, particularly in geographies where they don't have, in their view, the right level of exposure.
Interaction.
Oh yeah, interaction, sorry, Europe.
I want to mention that.
Yeah, just that little deal in Europe. Yeah, right. Again, strategic buyer. So it's really a very good combination in today's market of a lot of private capital, infrastructure funds, et cetera, along with strategics still being very interested in adding important assets to their portfolio.
To pile on to that, and it's interesting because we can talk about geographies, but when you start thinking about our industry from an infrastructure perspective, the data center and where that information ends up being consumed or transacted is at the intersection of energy, network, and people. So there is always going to be an evolution of that, and there's an investment pro forma that you can realize through that evolution. Applications that will continue to develop We talk about 5G as an example. It's still in its infancy. It's not really out there despite the hype, but it is going to be driven by applications that will need that infrastructure, that needs somebody to have already laid the groundwork or the foundation. And that's where the rest of us come into play for a certain segment of the market. And in other cases, there's other players that are addressing a different segment, but it's not a one-size-fits-all. And there's a monetization for everyone, be it in the infrastructure level or the application level.
Yeah, and I think speaking specifically to the APAC markets, we're really at the beginning of that kind of hockey stick demand curve that you know, the US and parts of Europe have already experienced with the hyperscalers who are growing rapidly. So, you know, you look at the mobile usage across APAC, you look at the amount of cloud adoption that's still forecasted, it's significant growth. The global cloud service providers are all competing, you know, and moving quickly to open new markets, new regions across APAC. So we're expecting, you know, to still see that kind of wave of demand coming to these markets that's lagging a bit behind the US and Europe, and we're really excited about that.
Tony, you made a comment to me one time that I've reused 100 times and sort of taken credit for it, but Tony made a comment one time to me, hey, if the cloud's going to grow, we need more sky to put it in. The data center's the sky. So if the cloud's going to keep growing, we need a lot more sky.
Yeah, absolutely. I mean, I think, you know, it's interesting what's happening. I'd love to get your perspective too, Jaime and Simon, but on the carrier-neutral interconnect facilities, kind of how that's driving. I think we're seeing both of you have developed really interconnected
I think
facilities.
it's a really important point, and you made the point about connectivity growth, and connectivity is key. And yes, demand concentration from sort of megawatt and space perspective is the hyperscalers. They just dwarf everything else. But why are they being successful? They're being successful because enterprises are actually figuring out how to use those capabilities, the tool sets, and they've got to get to it. And from our perspective, they're nowhere near as all in, and that might be yet, and it might be forever. And my view of the world is everything is a pendulum, and it'll kind of swing backwards and forwards. But we're still seeing major enterprises make the move from, you know, whether it's self-built data centers or infrastructure on-prem on their campus, and moving some of that to a data center or data centers, figuring out how to integrate those key and differentiating applications, making use of various clouds, and so the inter-cloud connectivity, as well as the design and implementation of their own infrastructure, all of that's coming into play. We still see the major hardware providers kind of fighting back, if you like. So we see, you know, entire Dell units brought in by enterprises. Mm-hmm. So it's really a mix, and certainly from an Australian perspective, we believe that only about 20% of the enterprise capability that'll move into colo and connect to cloud has happened. So, and remember, your point's well made about Australia being an opportunity, but we're only a country of 23 million people. And yes, you know, early adopters and heavy hitters and all that kind of thing because of distance. But yeah, it's remarkable the scale that's happened in Australia and what's going to happen across the rest of Asia Pac for sure. And I think even, to be honest, Europe and North America are only at the start of the hockey stick.
More to go.
There's a lot more to go, and we're going to go on to some of the other drivers, right?
Yeah, no, absolutely. Do you want to jump in, Jaime?
Yeah, I was just going to jump in with respect to Canada. Canada lags the US as well from an enterprise adoption perspective. So we're starting to see that transition, and quite often they're finally letting go of their on-prem data center, making a move into the cloud, and then we're seeing a little bit of repatriation coming into our data centers as they understand what workloads make sense, what workloads don't, and then we're seeing them come into colo. So it's actually a nice move to get them out of their on-prem data centers, but Canada is very much just at the beginning of that hockey stick.
That's great for you.
It is good for us. Thank you.
I think Jaime just made a great point that we're seeing a lot, and Tony's got, I'm sure, some thoughts on this too, which is this idea that, you know, the public cloud is not going to eat every workload. That's not the way it's going to end up. It's going to be a hybrid cloud world. Private cloud is still the best way to handle a number of workloads. And I think we're really seeing that now with enterprise customers, Tony. Certainly you see it at TierPoint every day, where they, you know, it's sort of the round trip. The workload went from private infrastructure to public cloud, and the enterprise discovered, wow, this is a lot harder to manage than I thought. It's a lot more expensive than I thought. and they're deciding, you know what, I'm going to put this back on dedicated infrastructure because it's just the more efficient, better way to go for this particular workload.
Right.
Some workloads, absolutely, much better to be in the public cloud, but there are a number of workloads that probably will remain or come back to private infrastructure. So it's a hybrid world going forward, and that, to connectivity, you've got to have the right connectivity in a data center to make all that work.
Yeah, and to your point, Tony, about carrier neutrality, so that used to be the word, and I think it's still important, but in fact, what's I think really important is sort of connectivity choice. And so at NEXTDC, for instance, we've evolved from starting out with a very strong and clear message on carrier neutrality. When you start out with empty data centers, it's important that everybody who's going to offer that kind of service is comfortable to come in and compete on a level playing field, and we've maintained that. But the expectations of customers and the expectations of the cloud providers have all, I would say, dramatically shifted in the last 5 years. So now it's expected that the data center that was carrier neutral will do aggregation into the cloud interconnect points. And so as a company, we've evolved that capability. It's an offering that we put in front of our customers if it's convenient for them. We've been really successful with that, and now we've got all of the major cloud providers, POPs as I call them, being an old telco guy, but the direct connects and express routes and all that. We have all of those in our locations all across the country. And what we're seeing is that actually then transforms how the enterprises think about it. And as you said, it's not trivial. We have a small engineering team that built that, and they spend 50% of their time deep inside enterprise customers, helping them understand how to do that, which is opening more discussions around, well, what does that mean from your co-location planning point of view and your infrastructure planning point of view? And when you end up with, we have 1,000 customers across the country, you're then trying to balance these things. And I think one of the really interesting differences between what you guys have been really successful at and some decisions we've got to make is we're starting to see a real bifurcation of what's important in what location, and figuring out how that benefits the enterprise at the end of the day. Of course, your own shareholders and so on and so forth. But that's what for me is getting really interesting.
So I promise that Peter didn't give me softballs to pitch TierPoint before we rehearse this, but it is, thank you very much though. But in all sincerity, I think a lot of great points. One of the things I want to touch on and then move on to another area, but the hybrid world is going to continue, and it's actually going to become much more relevant and as we go forward. I think the critical data that's being passed by highly regulated industries, the financial services, the healthcare, as well as government, need that split on both public and private cloud. So I think, Peter, to your point, really it is a hybrid world from a go forward, which all the data center providers are obviously going to benefit from. I think what's really interesting though is also we're spending a lot of time on talking about hyperscale and things like that. One of the areas that I think has been somewhat neglected has been true enterprise, right? Again, Peter gave me the softball, so I'll use it. We are a true enterprise company. It is a very difficult business. It's a tough business in that you're really, from a term specific, customers are not willing to sign long-term contracts, which is difficult from an investor perspective. But if you can make it work, and what we're trying to do, and I think that it'd be interesting to hear a little bit about this a little later, is trying to evergreen some of the services, meaning we will try and elongate a contract from 36 to 60 or even 72 months by working with equipment manufacturers and OEMs to say, okay, let's factor in and right-size this in. I think this is a lot of what we can all do in our business today, a write-down midway through the term, right? So it's an interesting fact that's coming on. I speak just from experience on the enterprise space. But switching gears, I think we were getting toward what's driving this business and what trends are driving it. Lee, you mentioned 5G. I think there's a lot that's driving it. It's obviously the consumption of content. We talked about eyeballs and things like that. Would be interesting to get, and please jump in, everybody, just what's driving it? Where are we going? We hear a lot about the buzzwords, it's 5G, edge, AR, VR. It could be interesting to dig into that. That's really high level, Can we talk a little about kind of where it's driving?
Yeah, I mean, I think some of the things you just mentioned are waves that haven't really hit the beach yet. They may be forming out in the ocean a little bit, and they're getting closer to shore, but those aren't the things, at least from the companies we work with, that we're seeing driving real demand in the data center today. Not that there isn't any, but it's not like the main driver. I think it's more just the traditional enterprises, finally deciding we've got to outsource this. It's not what we do. We're not making the right investments internally. It's not the best use of our capital. Let's let professionals that do this day in and day out handle this stuff. And so that's a driver. And then I just think, let's all think about our lives, how much we do now online, whether it's shopping, watching content, communicating. All of that activity that's just multiplying and growing requires more internet infrastructure, more bandwidth, more data center, more servers. So I think those are the trends. And then again, things that you mentioned, Tony, AI, 5G, the one that always driverless cars. I mean, again, I think we can all agree that, yeah, there are cars out there that, can be operated in a driverless way, but we're not seeing that turn into huge data center demand yet. I'm sure it will, but I think that's out there a little bit.
Well, interestingly enough, so autonomous vehicles, obviously, I think we're a bit away from that, but most cars today are computerized, right? So there is a Wi-Fi component of that too, so it's driving some of that connectivity today. So it is interesting what you bring up, Peter, is that pretty much everything when you're buying something new that has some type of gadget is wireless. So it's
connected.
It's a connected object, right?
Yeah.
I mean, so here's the thing, right? We use this slide in our deck, and I'm sure you've all seen it. Data is the new oil. So if you kind of unpack that, everybody is figuring out they need to instrument everything.
Yep.
And nobody throws any data away. The fidelity of the data that's being collected is increasing, and so you can take that all the way from, you buy your son a new mobile phone, and he's producing 4,000 pixel definition video of cats. That's a lot of storage. That's just a very simple example. You take that all the way to the enterprise, and the expectations from the management team are now that they're going to get that level of definition of data as standard, as opposed to it being 10 or 15 years ago, an IT team might be sitting there thinking, well, we could give them this data, but I don't know if they're going to digest it or understand it. And then in the middle, you've got companies like AWS and Microsoft, in my view, have performed an amazing catch-up and are now seriously challenging them, not just on a scale, but at the capability point of view, where they already had the enterprise sales piece, but all the tools that are now available. So not only have you got this ever-increasing pile of data, you've got more and more interesting and complex and simple ways of digesting and using that data. And so then you get to Kirchhoff's law, which is the second order thing where the silicon thing accelerated stuff, and now you've got silicon-based capabilities sitting on base of silicon data, and then you're accelerating all the things you can do.
And then developers figure out, oh wow, look at all these tools and resources I can now use. Interesting sort of anecdote on that. We're very close with Lance Crosby, back to his SoftLayer days. And Lance talks about, hey, when we just, thought up SoftLayer, no one ever thought of WhatsApp at that point. WhatsApp went on to become their biggest customer. Thousands of servers all over the world. Again, when they built it, no one envisioned that as a service. But once developers said, oh, look at all this infrastructure that's here, we can write this code and look at what we can do with it. And I think you're really continuing to see that. Mm-hmm. And as compute moves to the edge, I mean, look at the deal I should have mentioned that everybody's talking about here. What does Equinix buying Packet mean? Mm-hmm. What does that mean?
That's
really interesting, right? But again, bare metal at the edge, developers can make use of that, and they're going to think up and deliver services on that infrastructure that no one's even thought of here today, that we'll probably all end up using in a couple of years.
One note that I thank you for reminding me is that no data is ever erased. So some of those pictures from us 15 years ago at Tata.
I want to erase those too.
So that's a good point. I'll keep note of that. Lee, Jamie, you want to jump in?
You want to go first?
Yeah, I would just jump in. We're seeing a lot of demand in Canada in particular around the visual effects industry, gaming, artificial intelligence. So areas where we've got incubators in the major markets in Canada, and a lot of that workload ends up coming into our data centers where we can do high density. All of our data centers do up to 30 kilowatts a cabinet standard. And I see a ton of demand and growth coming out of those verticals. So really figuring out how to work more closely with those industries going forward as well.
I'm really glad Jaime mentioned that idea, that I think one of the trends that we've all got to look at is the growing need for high density or denser deployments. And I think, as compute, the paradigm, Zach Smith at Packet talks about this, for years we've been bringing the data to the compute. His view is we're going to start bringing the compute to the data. Right. And I think that compute that gets brought to the edge is probably going to be stuff that's higher density than traditionally people have thought about. And I think that's a real trend, important trend going forward.
And sorry, I would just jump in on one other conversation that's come up more and more over the last year, which is about the green story of our data centers. It's becoming much more relevant to clients as they're assessing where they want to move into. What is your green story? What are you doing with that energy? How are you getting your PUE as low as possible? And I think that'll be becoming increasingly important for us.
Want to jump in?
Yeah. No. I mean, I think I agree with all the points made. It's all of the above, and none of us are, necessarily the experts in how these companies are going to use all this data and what's going to, hit the market and the consumer base next. But it's all coming, right? It's all coming, and it's driving a huge amount of demand for compute and storage and processing. And yeah, the sustainability piece is key. I'm sure we'll hit on that in not necessarily emerging trends, but it's becoming, the topic keeps getting bigger and bigger as, the number of data centers, the amount of energy consumption that they're driving globally continues to increase. So, I mean, everyone saw the announcements that Microsoft made in the past week, which is amazing. And they're going to be pushing the supply chain hard. To help them deliver on those commitments. So that'll be an exciting space to watch.
Leah, you want to jump in?
I'll close it out with the environmental piece. And I use a cliche and say it's all about the kids many, many times throughout my career, because in the end, the on-demand lifestyle that we all have, and if you just look at education and the use of online tools for education or entertainment, just that alone will drive the need for the complexities that we all provide services for. But on the sustainability of the environmental side, and I feel very strongly about this, the data center industry gets a lot of knocks for the energy consumption, et cetera. But I'll tell you, the silver lining to this is because of what's happening, so we can provide services to you and everybody else who likes the data center or not, we are driving a lot of opportunities for investment on the environmental side. Dominion Energy is going to put 800 megawatts of wind offshore. Whether you like that or not, that's still a renewable source. And some of the technologies that are being used to help us be more economical, so the free services that we use on our phones are available, because negotiating with these folks is not easy. They have the best lawyers and they have the deepest pockets, but it's allowing us to contribute to, while we're the consumers of energy, to contribute to the environmental effectiveness of what you are driving us to provide a service for. So wind and solar lights, we've deployed them on our Ashburn campus and solar trees. We would not have done that in my past life at DuPont Fabris because it didn't make sense and it was expensive and it didn't add up. But today it's environmentally sensible and socially responsible to contribute where you can. So we're driving environmental capabilities. I don't know any company out there in the enterprise industrial world who's driven more purchasing or funding of renewable energy generation sources than the industry that we serve. And we are proud of that, and if you like it, great, and if you don't like it, put your phone down.
I think we touched on this.
You're here.
Thank you. That was awesome.
Is that a mic
I love a
drop?
lively panel. Boom, drop the mic. See ya.
Mic drop.
Thank you. I want to touch on something really quick, and then we'll take some questions. But there's sort of an industry standard in terms of building out a per megawatt cost. It was roughly around, I would say, 5 years ago. Peter and his team did a lot of studies on this, but it's really in that sort of $10 to $12 million per megawatt. Mm-hmm. It's taken a significant dip.
It has.
Love to talk about, and I think from an operating standpoint, it'd be great to hear, from your perspective, where are the other cost savings, where are the cost efficiencies, and clearly, I think one of the challenges that we're all facing is time to market. So how quickly can we build at a low cost and getting that space usable really quickly? We want to just kick off, Dana?
Yeah. So it's a huge focus for us at Airtrunk for sure. We talk about our key drivers. It's speed, scale, cost, and reliability. So this is what we spend a lot of time thinking about working on, and it's not just about how we manage the supply chain, but it's also about how we design our data centers and continuing to push the innovations and work with our customers to see kind of where they're heading in the future, and where they're willing to, take maybe a little bit more risk or be a little bit more aggressive in order to optimize the data center and drive that efficiency. So, we're talking to customers about, how do we raise the supply air temperatures beyond, anything we've seen in the past? How do we rely on, the utility grids where we have a reliable utility grid and maybe take out the UPS and the diesel generators and, move to the in-rack UPS and just all those technologies that, have been talked about, but how do we really get those implemented and just drive that cost down? And of course, the speed is critical. In APAC, you don't necessarily have the amount of built capacity or spec inventory sitting in the market that you might in some other locations. But that doesn't mean the end users aren't continuing to drive for those shorter lead times, right? And they've kind of gotten used to it in the US, and how do we make it happen for them in other markets? So it's a big push. The speed is so critical, but we can't compromise the safety, right? And this is becoming, it's raising higher and higher, and everyone's awareness and focus is maintaining that safety and the quality of the product that we're delivering. So, we're really proud of Airtrunk. 1.7 million man hours so far on construction sites and no lost time injuries, which is a huge accomplishment, but something that we're really passionate about and continue to focus on, and of course important to our customers and vendors as well.
Simon, you guys have really deployed some innovative steps in this. And so.
Yeah, I mean, innovation is absolutely a part. At the end of the day, all of those things are super important, as you know, but from our perspective, at the end, it's value and understanding where you sit in the value stack, and then having a conversation with your customer and how does that all really add together, and what are you looking for? So for me, the building industry has been figuring out how to build things fast for a long time, and sometimes I have some conversations and it feels like we're kind of catching up a little bit with some of those innovations, which is great. We're pushing some other ones, some of the heavy M&E offsite skid building that we do and lift in has taken ideas that they've been using for a long time and taken, we're at the point now where we're lifting 70-ton entire fully kitted out and tested switch rooms onto the 8th story of a building, and 4 days later it's hooked up and ready to roll. So these are all evolution, but for me the thing about speed at the end of the day is planning. And I think the next level of maturity, and some of our larger clients are demonstrating some really interesting stuff here, especially in the health and safety space, right? So there's starting to be a coming together of how do we all collectively solve this problem? Yes, we have to compete and differentiate, and there are different needs, but the speed thing and the safety thing is really, really, really important. And I think there's more work to be done there, and a more kind of end-to-end planning. On the cost side, you made some great points there. We need to try and figure out what do we actually want. Again, what's the value that you're looking for? As a telco guy arriving in data centers almost 10 years ago now, I was shocked to find out that this whole live thing was a bit of a misnomer. That the procurement department at the enterprise were essentially bonused or incentivized to get the highest reliability for the best price and so on and so forth, which was driving individual data centers to behave in certain ways, which weren't actually delivering the best possible price when you look at applications sitting across multiple sites. You go back to value on the power side, and I'm really proud of the industry collectively, how we've taken, 10 years ago, what would have been an average sort of 2 something PUE. At NEXTDC, we're very proud to have delivered the first 5-star NABERS sites in Australia. And we're down in the sort of 1.1 to 1.3, depending on the weather range. there's not much further you can get. We can't get past 1. I think there's a huge opportunity for value there in terms of instrumentation and then which compute should be switched on and switched off. And I think there's a huge amount of value there to come out of the industry, which will then drive and enable further growth. So all of these things are important, and yeah, managing your supply chain is absolutely one of them. So that's my perspective.
There's a combination of things that have led us to this point, but at a high level, it's standardization and scale. But if you look at the maturity of our industry as well, it's helped us to drive capital down, the cost of capital down, because we're a much more safer investment than some of the technology investments of the past, let's just say in the 1999 to 2003 range. So if you transcend that upstream to what we've talked about on the energy side, you know, the electrical utility companies, they have custom-built transformers as an example. We've standardized where we're at. They could use some of this standardization. They'd like to push the, electrons out at 60 hertz, but you may have a 60 MVA transformer in one substation in one utility and a 40 in another, and those are long lead items. So speed to market and standardization will help drive those costs down, because the utilization capabilities of the data center are what really helps us on the operating expense side, not necessarily the cost to build an N+1 versus what used to be a 2N environment. So I think that standardization, scale, and the maturity of the business, so we can reduce cost of capital or make an investment in us much more stable, has helped to drive down costs.
That's a great point.
It is. I think the analogy we often draw is the asset class. The data center asset class now has really come into its own from the capital market standpoint, and not dissimilar at all to how cellular towers went from being, you know, at one point a more speculative asset class that private equity invested in with the expectation that they needed to make high 20s, 30% annual returns given the risk profile. And as that asset class matured and people realized how stable it was and how sticky the customers were and how good the credits were of the underlying customers, it attracted a much lower cost of capital investor, which, to Lee's point, really drives down, you know, the all-in cost to build, and therefore what, you know, the customer can be charged for the product. And then I think the other thing is we're seeing a lot of operators, and I suspect all the people sitting next to me here fall into this category, where the mindset that's being brought to bear on data center development now and design and build is very similar to a great manufacturing company. You know, how General Electric, I'll still put them in the category of a great manufacturing company despite all their problems, but how they think about driving cost out of a jet engine. It's every single part being looked at, working with their suppliers to say, how do I take 5 cents out of this bolt, this hinge, this wiring harness, whatever it is, and it's just this relentless sort of process of taking cost out everywhere you can. And we're seeing companies do that, and it pays off.
Jaime, anything?
I cannot add to my panel.
Okay, all right. We are actually out of time, but we have 8 seconds, so maybe we can get one question if there is one question out there. Yes. Can you scream?
It seems like the multi-cloud environment has been massively helped by Microsoft the last 4 years on public cloud. I guess for the audience, do you think that Google can kind of enter this market and be meaningful and also, you know, make multi-cloud that much more dynamic?
Just so everybody can hear the question, the ask was really around Microsoft has done a great job in coming into the multi-cloud world, but can Google step in and play a role in it? Correct? Okay. Any comments?
I'm happy to grab that.
Yeah, please.
So I worked with Google back in the day when they were building out essentially the world's largest non-carrier global subsea network, and they were buying pieces of land in Taiwan that kind of blew my mind back in 2007, and so they had a vision for their own platform, if you like, that was already of a significant scale. I think we'd all agree they've got a few tens of thousands of brilliant engineers, and so you put those two things together and they've been incredibly successful, almost kind of in the background with search and then a whole bunch of other stuff. Meanwhile, the AWS platform emerged. They've put on top of that a very effective enterprise and partner-based sales force, essentially, and delivered what you're saying now that I agree with you, that Microsoft are offering genuine choice. They've scaled on the infrastructure side, swung their business from sort of software and renewals to as a service, already had that enterprise capability in terms of knowing and owning and understanding the customer and the partnership environment under which solutions get delivered. So that for me, those are the components. What Google had been missing, in my humble opinion, was that knowing and understanding the customer and being able to translate what they're capable of into something useful to the broad customer audience, not necessarily just the very technical folks inside various parts of the business. They've just made some massive, massive plays in terms of their hiring. I'm sure some of the folks at Oracle are not too excited about some of the changes that have happened. And those are individuals and teams that are hugely experienced in this space. So I think the answer is yes. And I think that's almost an inevitability from a sort of competition, macroeconomic point of view, if that's the right phrase. And so we'll see that this inter-cloud is going to be really important. Salesforce are in the background transforming their very impressive capabilities and delivering those on different fronts. So, the field's wide open in my view, and we're only just beginning to understand how you link all that stuff together.
Yeah. I think betting against Google is a rather perilous thing to do, I think. I think they're a pretty capable organization, as we've all seen.
Yeah, as Simon mentioned, I think we're heading into this, multi-cloud, and I think there's so much business out there. There's an opportunity for everybody to play a role. It's going to be about partnerships from a go-forward standpoint. But we are out of time. PTC panels are done. So thank you, everybody, for coming to PTC. Thank you to this panel. It was awesome. It was really nice that I didn't have to control the questions. You were jumping in. So appreciate everybody's time. And
see you next year.
We'll see you next year.
Yeah, thank you.